So this video is sponsored by Bityard, a crypto exchange with 9 out of 10 stars by the Coin Bureau guy, 400 cryptos to choose from their spot exchange, derivatives that include commodities, forex and traditional markets, as well as inverse perpetual coin futures, USDT perpetual futures and leveraged tokens. You can even set up a copy trading account so people can copy your trades, you earn commission on those trades, or you can follow other traders who have better results than you. Set an account up with a link in the description and get mystery box bonuses for completing random tasks. Bityard. Hello everybody, welcome back. Let's have a look at Bitcoin, and I suppose just start with a bit of an overview of the altcoin situation. It's still kind of moving up. Who said that? 48%, 0.7 dominance altcoin rally. It's an interesting situation given you know what you'd generally expect to see when Bitcoin's moving down, but effectively that's what we got, isn't it? And it's still moving on now. So there we go. There's your 48.7% dominance tagged and still falling. Now we can look at this like a normal chart. This is obviously your Bitcoin dominance. We can look at this like a normal chart, and we do, but generally on a longer term time frame it makes more sense. As we're breaking down below a 200 exponential moving average on a 4 hourly is not really too much of an issue for it really. It's done that in the past, but we want to see what kind of reaction it's got. I've got a theory outside of your general rotation, which is that the balance sheets of most institutions consist of Bitcoin and Ethereum, and as we are entering into the ultimate of panic, they are dropping those at this particular level. Now, they don't really have, you know, VRA to dump into the market. They don't have, who knows what they've got, but they don't really have those sort of things. So that's a retailer's kind of vibe. Now what we're seeing, I would say, is institutions crapping their pants, and that's a theory. It's obviously it would make sense for that, and that's why we see the such a significant outperformance on the way down from Bitcoin and Ethereum in comparison to the rest of the altcoin market. But it is also interesting how it matched an exact rotationary area, you know, as specified by yours truly, me. Right, so let's have a look at the general vibe going on over here. So we'll start with the Nasdaq actually, and we'll work our way back. In fact, I've not got the Nasdaq up. Actually, okay, so what we'll do, we'll start with Bitcoin, work our way back. So there is a chance that we do find a bounce, and like a significant one. Now, we all know that we're at the mercy of the ECB and the FOMC at the moment. This is Bitcoin, this is your monthly Bollinger Band bottom, and that's 18,600 thereabouts. We'll get onto the Nasdaq. The Nasdaq on the pre-market last time I checked was up about 0.5%, so not really anything. I can't imagine anyone's effectively looking to trade. I think all the trades have effectively been done, and what we're waiting for now is, what is it, 2:30 or whatever, 1:30. I can't really remember exactly UK time, but at some point today the next rate hike will be announced, and like I say, the markets have largely priced in that they've largely priced in the 75 basis points situation. So this is Nasdaq, not the pre-market. This is the closure of yesterday. So if we just move this to a monthly, we are at a major support for the monthly as well, finding a sort of reaction from that. So both Bitcoin and Nasdaq hitting their Bollinger Band bottoms, but also the 50 exponential on the monthly as well. So Bitcoin's not done that; it's sliced right through that. This is your 50 simple, and there's your Bollinger Band bottom. So neither here nor there really for Bitcoin. It's Nasdaq really which is the driving force here. So we're going to have a look at something just very briefly on here. In fact, we'll look at it on Binance's charts. It's still relevant here. This is what we're going to look at for a little moment here. So this obviously is quite a big drawdown so far. Pretty hardcore and horrendous, all the way down effectively to more or less 20,000 basically. 71%, 72 give or take from the top to where we are right now. Now in the last bull market end when it popped, we did have a drawdown similar to that of about 70, and then from that 70 we got a pretty decent relief rally to the tune of 94%. So I'm not saying that has to happen, but it has happened. We take this over to the weekly, and what we see is the same read that we've been looking at for bottoming vibes. So we've been saying that we bottomed around here, big bottom, that was a 50% drop, bottom, big bottom here, that was a 50% drop, bottom, and this could be another 50% drop to mark the absolute bottom. Again, we've been saying this since we got this this read here. So 3 times, well, could be 3 times, but definitely the last 2 times we've had these bottom signals take place. Yeah, it was about a 40 to 50% drop from the first area of where the divergence took place on a weekly here for the money flow index. So if that's the case, we'll measure it from this candle or this candle, or slice in between the two. It's about 40,000. So what we're looking at here is effectively the same kind of read so far, about 49. So just to show you that in reality, we'll measure it from the bottom here. So that was where the bottom would have been red, and then just show us there. So that was a 46% dump from here to here, marking the divergence, effectively the bottom. And again, we got this over here. So, it's so annoying. Okay, right, so yeah, let me just show you. So we got it over here. So there's your bottom vibe over here, around 6,000, 7,000, and then a big draw down here to the tune of, let me see that wick, about 47%. So it's not to be matched. You can't say, well, it did 47, we're waiting for 47, we're more than that. It's just showing you the money flow index still diverging, 40 to 50, 40 to 50, and at the moment 40 to 50, closer to 50 obviously. So it looks to me like this is looking to kick in or play out at the moment. Obviously we wait for weekly closures, we wait for lows, significant lows, usually in the form of a capitulation dump, to be honest with you. That's what we got over here, that's what we got over here. And to be honest with you, whether you class this as capitulation, it doesn't really look like it. That looked a little bit more like it, but as far as the volume is concerned, this is less like it. But as we've been saying for a while, the bottom will be pronounced, and the lows could be deep. And provided we still maintain this divergence, which is almost inevitable considering how low this money flow index drops down to, is the lowest it's ever gone to, it would suggest that if and when we see that enormous low, we will likely see the bottom, and that would be the absolute bottom. And I suppose that's what a lot of people are waiting for. Now that bottom formed on this Bitcoin chart for me would be an indicator to get into the altcoins that are I suppose what I would consider to be reasonably not complete shitcoins, let's just call it that, and at their significant lows, because they will be the ones that have further to run, I would imagine, despite the dominance chart being low, which is usually something that I would say don't buy the altcoins around those levels. But we're talking long-term investment type vibe, buying those things, staking those things, whatever, and holding them throughout a decent period of time. You will get some decent value for money. I'll make a video on the ones that I'm looking to buy on these significant this significant low that may or may not get formed in the form of a giant dump of capitulation. So yeah, RSI as well going into oversold on the weekly. Bit of a non-event really. Oversold just means we're wrecked and going to continue to get wrecked. This is your monthly RSI going down lower than it's ever been. Again, certainly not oversold on a monthly, is it? Which is something that we have to accept. Nor is the money flow index. It's still in a very well, it's kind of in the middle zone really. So it's neither here nor there. I suppose you could argue that that's where the money flow index was before the big dump, and we got our divergence on a monthly. We're far from getting divergence on this on a monthly, but we do certainly have it on a weekly. So a little bit of hopium there, so for you to climb out from underneath your desks or whatever. It is what it is. This is the market that we play, and red candles are pretty attractive, I have to say. The lower we go, the more attractive it is. I've not got any more buy orders set. I've decided to remain in British pounds for the which is basically how I hold over a long period of time. So when I sold around here, I've more or less basically been in pounds, apart from the things I've got in KuCoin and Gate.io. Obviously I have no alternative to use Tether, but I'm not going to be unlocking or spending any of those pounds into Tether in the hope for a buy order. What I'll do is I'll wait for what might be a significant low to form, and then I'll buy into that using the old British pound. The old British pound, can't beat it. You can beat it. The dollar is beating it senseless actually at the moment. So overall, altcoins continue to outperform Bitcoin despite they're all going down. Everything's going down, but generally speaking, for the most part, they're all up in comparison to their sats, which is pretty incredible really. This looks like it could continue as the dominance chart sort of bleeds out, but let's face it, it's not about alts, it's not about Bitcoin, it's about Nasdaq, and it's about the meeting today. So let's not beat around the bush. We have to basically wait and see what it is that takes place today. Inflation is high, needs to be dealt with, but you know, at the expense of what? The entire market, the entire economy. You know, inflation is high, but let's not run away with ourselves. It's likely to remain high, regardless of what they decide to do with rate hikes. And that's just my opinion, because I would base the whole thing on oil. Oil prices is going to be the precursor to spotting either a higher or lower CPI report. That is the nature of it. And actually, if you've got time, we'll just have a quick look at crude. Crude oil. We were looking at this last night on the live stream. Crude oil futures. We'll have a look at crude oil futures then, shall we? Not that. What the heck? Crude oil futures. Right. Well, that's screwed. What's going on here? Crude oil futures. There we go. So yeah, there is a chance that oil has found a peak around these levels. It might have done. It may have done. There are signs to suggest that it could have peaked. So looking at here on a monthly, going from strength to strength, obviously diverging here with your moving averages. So that in itself is quite bullish, I have to say. That does suggest it's got further to run. On a supply-demand type vibe, you've got China opening up from their lockdowns. Demand will increase, whereas supply remains effectively restrained. But we have approached a reasonable area of resistance, which is that $120. Now, we were talking about this on the stream last night. Yeah, this is my expectation for oil, is that we will continue to be high. We may blow our top off, or we may retrace from here, but we are not going to go lower than 75. So we're going to remain within this area for probably a long time, which means that inflation is likely to remain high for quite a long time. Inflation's high because of all the things that feed into inflation, fuel prices being a big one, obviously food prices also, and at the end of the day, if those things remain high, which due to geopolitical events will maintain those high prices, unless somebody cracks open a new oil well and some refineries, which obviously can't happen overnight and might not actually happen, we're going to be stuck like this. Inflation will remain high. The CPI and the FOMC meetings that deal with that are kind of just, it's like putting a sticky plaster on a gaping wound. I don't think that what they do, whether they go really aggressive or quite timid, is enough to deal with inflation properly. It's likely to stay high. But given the way that oil appears to have found a resistance around here, that might show inevitably that if we remain at this level or lower, CPI will stay high, but maybe show us a little let off. We might see inflation come down, and I would say but we can look at the oil prices and we can navigate what inflation read is going to be, regardless of what the rate hikes are. That makes a lot more sense than just waiting for the data to magically appear once a month. It would make more sense to look at on a chart basis, at least anyway. It's an indicator. The higher this goes, the higher inflation goes. The lower this goes, the lower inflation goes. It's only one portion of inflation, but it's a reasonably accurate one at predicting the inflation and the increase figure of the inflation figures. Right, so that'll do for now. Let's watch the death and destruction, and then potentially the 100% pump take place later today. But for the moment, it's dodgy and deadly business. Right, thanks for watching. Hope you have a nice day, guys, and take it easy.